So as many of you guys have been watching and paying attention to in the media, CNBC, Fox, CNN, WallStreetBets, Reddit, Facebook, you probably have seen a lot of people talking about people investing with WallStreetBets on Reddit. And that's what we're going to be talking about today. And the main purpose of this video is to kind of educate and show you guys what it really means to bet with random people online. I'm going to go ahead and do my own trades on the side. So pretty much you're going to see me betting with WallStreetBets, exactly what their strategies are. And I'm just gonna go essentially throw my money into what people are doing online and then also doing my own strategy analysis and putting my money in there. And I'm gonna take this data, compile it into this video, and over the next couple of weeks, you're gonna get to see what my trades look like. And that way you guys get a sense of what it's like to do your own analysis and also bet with random strangers on the internet. And that way you don't have to put your hard-earned money online. You can just watch me throw away or make a lot of money in this YouTube video. So hopefully you guys really enjoy this video and get a lot of value from this video. If you don't mind, go down there, smash the like button, and if it's your first time to the channel, subscribe. And without further ado, I'll see you guys in a couple weeks. Let's go. So here we are. It's been a couple weeks. I just got done with grocery shopping. I noticed that it's 2:30 on a Friday, so I figured it would be a great time to record this follow-up video. A couple things before I get into the numbers, and I have my notepad open here so I can give you the exact dates and numbers where, I invested my money, and also I'll go through kind of the initial WallStreetBets investments, and then I'll go into my personal investments because there is a huge variance in what I actually was able to bring in. The losses or the gains were much different on both sides. So I want to show you guys kind of what I've been able to pull off, and this should give you a good idea of whether you should do it or not. In my opinion, I say do your own research, and we'll get into why I think that in just a minute. But let's dive into each and every single position that I purchased, when I purchased it, and how I, pulled it off or, lost money on it, right? So first and foremost, this was done through about a 2-week span of time. Most of these positions were less than a week. And I decided to do options because I figured options were better than stocks individually. That way there's more volatility for me. And so you guys get a clearer picture of what is actually happening in the market and how volatile it is. And so the very first thing I wanted to talk about are my WallStreetBets positions. And those are really, really interesting. So the first one is on my list is actually Express. So Express was one of the kind of smaller companies that wasn't mentioned as much on WallStreetBets, but it was mentioned a few times. There are still people that are holding on to Express because, there was kind of a short squeeze in the last few weeks. And I got in on January 27th. I bought a $7 call for $820. Within a few minutes, I was up probably around 50, maybe 40 bucks, something like that. And then the closing bell hit. I bought it somewhere in the afternoon because prices aren't as volatile typically at the end of the day. And I figured, it might be good. The very next day, it went up for like a second and then immediately crashed. So I said, okay, well, everyone's saying diamond hands, so let's hold on to this company. And so on February 1st, I actually ended up closing out my position for only $200. So we could consider a $620 loss in 4 days. That is brutal. So Express didn't work out. I got out. It would have went down lower. It would be like at 120 bucks. So I would have lost another 80 bucks on top of that. So I'm glad I sold off. And so here we have the next position, which is AMC. AMC was one of the two big ones that were talked about the most, right? GameStop was the other one. I'll get into GameStop in just a second. And AMC was the other one. So AMC, I bought on January 27th, the same date that I bought Express, because I figured, hey, it looks good. It was on discount, but there was obviously good reason for the discount because it was falling for a lot of different reasons alongside GameStop. So AMC, I bought a 0.5 option call for March 5th, and that one cost me $1,610, so $1,610. Now, this one was really interesting because it also went up in the first, hour that I had. After that, it crashed, and luckily I did get out on this one a little bit smoother. Still not a profit. AMC went down a lot. Luckily, I bought a 0.5 call, so no matter where it went, at least I would have been in the green, right? As far as not profit, but the option wouldn't go worthless, right? Because I bought an option that's, cheaper than the stock price by a multitude. So it wasn't as volatile, but it was nice to see that I was able to close out the position at 1320 and didn't lose 80% of my position like I did with Express, right? AMC, I only lost $290. Okay, so $290 on AMC, and $620 on Express. That is a lot of money. And that's why I say don't do this. Luckily, I did pull off something that a lot of people would call paper hands. And that's totally fine by me because I bought GameStop at closing bell 1:59 p.m. I bought GameStop a $100 call on February 2nd. It looks like it was a 4/16 call, so April 16th call for $4,170. And I had a bit of a heart attack because as soon as I bought it, if you were to look back on those charts, in the after hours, GameStop crashed. And obviously the options don't move. I was already down like $70 because, you know, from 159 to 2, it started to dip even more, which kind of sucked because it was on a trend line where, you know, it was kind of meeting some support, right? And then it crashed through, which I was like, oh, at least it was very volatile stock. So I wasn't super concerned. But here's what happened. February 3rd, I woke up early. I decided, I was like, hey, I'm gonna wake up super early before the open. Went ahead and took a look at GameStop. It was floating a little bit above where I bought it, and it was actually trending up. And so I put a sell order in right as soon as it opened, and it turned out to close, and it barely hit it, and then it immediately crashed under. So I got really, really lucky on GameStop here, and I sold it for $51.70. So bought it for $4,170 and sold it for $5,170. So what did we learn from this? Well, I pretty much broke even with, you know, on the Wall Street side. I could have lost a lot more money. The GameStop position could have, and I almost thought it was going to lose money based off of after hours trading. Usually that means a week open, but I got lucky in the fact that it went up. And then after, if I didn't sell it, right, if I didn't sell it that high, I would have lost money because GameStop is sitting well below where I sold it at. I sold it at around 100. I think it was sitting at $108 per share after that. So I bought it at 88. It went down in the after hours, and then it opened up higher. It opened up at like 98, and then it, you know, climbed to 110 or something like that, and then it dropped down immediately, and now we're sitting in the 60s at the time I'm recording this video. So I got really lucky on this one, and again, I don't recommend doing this. I don't recommend just following the crowd, because this is what you could have done, right? You could have just put your money into better and safer plays, right? You don't have to buy, first of all, you don't have to buy option contracts. Second of all, you need to know a lot before you go into these types of plays. Like, I knew that AMC and Express were going to be very volatile, so I knew I was probably going to lose money there. And even GameStop, I thought, well, I could either lose money or make a lot of money, right? And everyone is holding GameStop, right? That was the whole thing, is like everyone was saying to hold GameStop against the hedge funds on Wall Street, right? So that's why I said, okay, well, GameStop makes sense. It's down a lot. It's in the 80s. It could go back to 100. Luckily, it did the very next day. Luckily, I sold, and I was awake to sell the very next day. And we came out somewhat on top. I wouldn't call that a win. I would call that a bare minimum win. Like, very, very, and almost a loss, right? Because what did I gain from this? I gained a lot of heartache. It was very painful. It was not fun. I didn't have a good time feeling like I'm investing in good companies. I felt like I was just riding a wave, and I didn't know which way the waters were going to go, even with all the technical analysis that I've learned over the years. So let's dive into how I decided during this, right? Because I was down a lot of money. This is before the GameStop. I actually started to buy, you know, my own positions. And so on January 27th, I decided to buy Microsoft, a 250 call for Microsoft. I played the earnings also, so we'll get into that in just a second. So Microsoft 250 call for 121.22. So this is a year out. I always play safer when I am betting myself, right? Because I know what I'm doing here. So I'm willing to pay a little bit more premium for the time, essentially, right? And so Microsoft 250 call, I paid $2,340. And it paid out just one day later, $24.80. So I made $140 there. Not that much, but it was something. Then January 29th, the very, very next day, I bought the same exact option call for a $150 discount off the original, and actually a $10 discount on the original first time buying. So the price is $23.30, right? So $2,330. So I bought that and sold it just one day later for $26.80. So that was a $350 profit. So not too bad, right? So that was Microsoft in general. That's what I made off Microsoft, about the same amount of stretch of time. And we got $490 in profit in just a week. And then we also had a Tesla put option because I noticed Tesla was dropping in price. The entire market was having a pullback, and Tesla, because right before earnings, they didn't know what was going to happen, if, you know, they were going to make money or not. Tesla, $210 put for 120. I always recommend buying call options. This is just one of those that I just saw that as extremely overpriced. The whole market is crashing. Tesla is like the market leader, I would say, right now as far as like volatility goes. So if the whole market's falling, Tesla, I feel like, is going to fall pretty hard, and vice versa. If the market's going up, I feel like Tesla has, you know, over time gone up more than most positions in the market. So Tesla, 210 put, again, 120.23 of the date, and I paid $20.45 for that. And then immediately, same day, within a maybe like an hour period, I sold that for $155 profit, 2,200 there. All right, and this is where it gets interesting because I have a couple other positions. So I had SGGR. You guys know that I'm a big long-term holder of Schrodinger. I did a whole video. If you want to go check that out, I'll leave it down in the comment section below, or you can just go watch my best stocks to buy playlist. Those are the, you know, companies that I'm buying long-term. So Schrodinger, I put a $90 call for 121.22 on January 28th, and I paid $2,600 for this, and I sold it on the very next day for $2,700. Now again, technical analysis involved. I looked at the stock, it looked good to me. I knew the long-term trend was going up. I bought it on a dip and I sold it on a high. So there you have 26 to 27 in one day, $100. Not too bad. The next option, and this is actually something that I bought a long time ago, but I felt like I should include it in this video because one of the additional contracts that I bought was around the same time during this. I just wanted to double down my position to show you guys that it is possible to even make money when you're down hundreds, if not thousands of dollars. You can still make money as long as you know what you're doing and what your price targets are. Some people are going to tell you should sell your position early, and I agree with that. In certain cases, I think it is good and wise to sell your position, especially if they're short-term contracts, or if you just stop believing in the company based off of some kind of metric that you used to have a belief in, but maybe the company changed their views. But as far as options go, long-term options, this one is only 7.16. So let me get into the option. Twitter, I bought, this is January 11th, so same month, just about 2 weeks before I started recording this video. So Twitter, $50 call. I bought 3 of those for 7.16, so that's when they expire, for 20.55, so 2055. Then I actually ended up selling that position, or those 3 positions, on January 26th for 24.90, and I was actually down about $300 on this position. But again, I knew what was going to happen. I knew that the market was going to reverse. Twitter was already meeting trend lines. It was maybe going to retest a certain level. I was willing to hold off. I actually bought one more position, and I'll give you that position in just a second. But essentially, I knew that it was going to reverse, and it did. That's what I like to play, is I like to play reversals. Again, those are more tricky, more risky, and have greater returns, but also you have to hold off on the losses. You have to be careful. So here we have Twitter, January 25th. So the day before I sold this contract, I actually bought one more position because I noticed that the price was reversing. So I bought for 645. I bought the same position January 25th. That was just one contract, and I sold that same contract for $800 on the same day that I sold the other ones. Just a little bit later in the day, I wanted to hold off and see if it would go up a little bit. It didn't. I believe it actually went down just slightly. And if I would have held that position maybe at 2, 3, 4 days, I would have made a few $100 on top of that. But that's not what we're here for. We're not here to try to time the highs. What we're here for is to make sure we lock in those profits when they're profitable, and then we can enter new positions with better metrics, better numbers, and hopefully make more money versus having to hold and see and pray and hope that it goes up. With GME, as you saw, luck was with me on that play, but it doesn't always work out that way. And so before I give you guys the grand total, again, I'm not gonna know this, so I'll just put it up here in just a second. I want to tell you guys, thank you all so much for watching. I'm going to go ahead and put the links to the Robinhood, Stash, M1 Finance, all those stock apps. If you guys are new to investing and are just here for the first time, go sign up with those. It gives me some money, but also gives you guys free stock and free money to play with. So you guys can also maybe recreate some of the lessons and some of the profits and some of the gains, and use some of the knowledge that I put out in this video. So hopefully you got some value out of this. If you did, go smash the like button. It really helps out. But here's the grand total of everything that we made on WallStreetBets, and here is everything that we made on our own. And for a combined grand total, if you put those together, here it is. for you guys on the screen. And remember, if it's your first time to the channel, don't forget to subscribe so that way you guys don't miss great content like this. If you have any questions, if you guys want to know how I analyze these stocks, again, I'm a long-term investor. I'm not just a trader. These are just some positions that I see as profitable as far as on the investment side. So I like to maybe sometimes play the option side as well. But this is mostly for educational purposes only. I wanted to show you guys that it's possible to make more money on, doing your own trades versus, following the crowd. Again, if you bought WallStreetBets positions long time ago, just on pure analysis, speculation, right? Just someone maybe has done the right math. Maybe you would have made more money than me. But again, the probability of you entering the right trades, again, Express, see, that one went way down south. AMC went south. GameStop went south eventually. I got lucky and got out as soon as I pretty much made the trade. I mean, if you think about as far as market hours, right? If you think about how long the market was open, I bought at 1:59 p.m., which is 3:59 in New York, right? So as soon as the closing bell was about to hit, I bought the position. So I held it for 1 minute that day, and then I sold it within maybe 5 minutes the next day. So I held that position for 6 minutes and made $1,000. But if I would have held another hour, I would have lost $1,000, which is my gains, plus more. So again, be very vigilant when you're doing this. You got to learn a lot more than just, pure, let me just copycat what these guys are doing, right? You don't want to be like WallStreetBets. I guarantee you, there's so much randomness. There's so much hate. There's so much, trial and error that goes into that. And eventually it might get hit really hard with a lot of losses. So I would hate for you guys to do that. So always do your own research. Be wise. Take my information, take other people's information on YouTube or on Reddit or on, read your own books. However you intake information, go ahead and use that brain of yours. There's a reason why you have one, and don't just follow what other people are doing. Do your own analysis and make sure that you learn from your mistakes, because when you learn from your mistakes, then you can make better decisions down the road first time. So hopefully you guys enjoyed this video. Thank you all so much for watching, and I'll see you guys in the next one. Peace out. Feel free to check out the links down in the description below where you can get a free stock from Robinhood, $20 free from Stash, 2 or more stocks free from Webull, or $10 free from M1 Finance.